Very good evening, my dear students. This is CA Tawfiq Tafail, and we are here starting our financial management workout batch. So, what is this batch all about? And let me also tell you what you are expecting from me and what I am expecting from you in this workout batch. Both the expectations are met, only then this batch will be a very successful batch. So the first one is that in this workout batch, I am going to cover 100% of financial management, but 100% of financial management in terms of weightage. So we are not going to leave any topics. Okay, we are not going to go only A category problems. Only A category chapters will be solving. C category chapters will be. So from A, B, C, whatever the category is, we are going to solve all the problems, but keeping in view that we are having an exam perspective. So we are having an exam perspective, keeping in view. So this batch is mainly for those people. Okay, this batch is mainly for those people where the examination is nearing and they needing practice. And the second one is they are lacking confidence in the subject, either due to low conceptual clarity or due to gap in practice. So either there can be a huge gap in the study period, or so they want to brush up all the concepts and they want to solve all the problems. So that is what is the purpose. So in this batch, the first thing that we are going to do is that we are going to cover total chapters. So we are having total 9 chapters in financial management. Okay, we are having total 9 chapters. So let me just, list out all the chapters. Before going into the subject or before directly jumping into the subject, we should be, knowing something. Like how if we go to some areas, if you become a customer, ask for the KYC, know your customer. Likewise, when you're studying any subject, you should be knowing the KYS, that is, know your syllabus. Now, what is your syllabus? Okay, what is your syllabus? You're having total 9 chapters. So the first 2 are theory. Okay, the first 2 are theory chapters, which is Introduction to Financial Management. And the second one will be Types of Financing. Okay, and the second one will be Types of Financing. These 2 are theories. Okay, these 2 are theory chapters. From here, mostly, if like you all know that 50 marks is your financial management, out of those 50 marks, 30%, which means 15 marks is MCQs. Okay, 15 marks is MCQs and 45 marks it will be descriptive. Okay, 45 marks will be descriptive and 15 marks will be MCQs. Out of these 45 marks, from 6 to 8 marks, theory questions. Okay, from 6 to 8 marks, theory questions are asked. Out of those 8 marks, usually 4 marks or 5 marks theory questions are asked for first 2 chapters only. So first 2 chapters, the weightage itself is 4 marks. Okay, 4 marks or 5 marks. So 8 to 10% weightage is given for first 2 chapters. Okay, this is point number 1 that I want to tell you. Many people have, this, that our theory, we will not study theory. But, okay, this is not a very approach. Theory is a very schooling thing. Okay, if you study it very tactfully. So this also we are going to cover theory part. But theory I'm going to cover in the last, because when examination is nearing, then the theory part, if you are, if we are listening to theory part, that will be the retention power will be high. So for that reason, I will shifting the theory part in the last, and in starting, I'm going to cover all the practical parts. So these are the first 2 chapters. Third, we are going to start with now analysis chapters will come. Okay, this will be my order of coverage. Then we will cover what are all the chapters where analysis. See, first thing, I am just starting with little bit theory. So starting with 5 to 10 minutes, you listen to me. Okay, so once a base is created, then beyond that base, we are going to cover the entire financial management. So a foundation will be created. Then slowly I will be building blocks on that, and then this revision will be completed. So the first thing, what is financial management? Financial management is management of finance. Okay, simple. It is management of finance. Sir, what is management and what is finance? So usually finance means money. Okay, finance means money. So which means, sir, you're understanding that anything related to money will come under the scope of financial management. So what is management? So if you go that, okay, if you go into any corporate and if you see managers will be the question, what is the work of the manager? They are getting paid high salary. So the work of the manager is to take decisions. So financial management is nothing but taking decisions related to money. Okay, this is what is the meaning of financial management. Okay, in this subject, what we are going to study? We are going to study taking decisions. How we have to take decisions related to money. Okay, related to money. But related to money, anything will come. Personal finance will also come. Correct? How much amount I'm having in my purse, how much I'm spending for my girlfriends, boyfriends. This is also relating to money only. So again, it is scoped out to corporate finance. Okay, even though this is finance, but we are talking about corporate finance, which means decisions related to finance, which means decisions related to money for an entity or for a corporate. That is what we are going to see. So I'm scoping the discussion. Our discussion is to take decisions. Our discussion is to take decisions relevant to finance. Okay, we take decisions relevant to finance, related to finance for an entity. So for a corporate, because what we are studying is corporate finance. Okay, what we are studying is corporate finance. At CA Inter, okay, at CA Inter, all the discussions will be for corporate finance. At CA final level, you will be seeing core finance. So in CA Inter level, you are seeing corporate finance. At CA final level, you are going to see core finance. So right now, what you are going to see is that for a corporate, whatever are the decisions that you have to make, that and all you have to study here. Okay, in this subject, that is what is Introduction to Financial Management. So Introduction to Financial Management, you saw. Okay, Introduction to Financial Management. I'm just brushing up. Okay, I'm just brushing up because this is what is the basics. So Introduction to Financial Management, you saw that financial management is nothing but management. Okay, management of finance. This is nothing but management of money. So this is nothing but management of money. Sir, management of money for whom? Okay, for corporate. Okay, for corporate. So this is actually corporate financial management. Though they are giving financial management, that is corporate financial management. So we are going to see corporates. Corporates means businesses. Now, management of money. So management of money. Sir, what is the meaning of management? So management or a manager. Okay, so manager, what is the work of the manager? Their work is to take decisions. Okay, their work is to take decisions. So now the meaning comes that financial management means taking decisions related to money for corporates. Okay, this is what is the meaning of financial management. So we have to take decisions. In corporate, how many types of decisions are there? Okay, how many types of decisions are there? So in financial management, we only have 3 types of decisions. Okay, we don't have any 4th decision, and these 3 decisions only you are learning here. So in financial management, you will learn only these 3 decisions. So total 9 chapters is covered only to teach you these 3 decisions. Sir, what are those 3 decisions? First one, okay, the first decision is financing decision. Okay, the first decision is financing decision. The second decision is investment decision. Okay, investment decision. And the third decision is dividend decision. Okay, and the third decision is dividend decision. So these are the 3 types of decisions that you're going to learn in financial management. Now you will have a question, sir, why 3? Why not 4, 5? See, any decision for the corporate will fall in these 3. How, sir? See how a business will be. For a business, what you need? You need some capital. Okay, understand this is what is basics. In the 10-15 minutes of the basics will help you for the next 10-15 days of classes. Sir, what is a business? For the business, we need capital. Okay, for the business, we need capital. Sir, we need capital. So capital means money. Now, that means for a business, I am needing money. That is what is the first step of any business. I need some money. Okay, sir. If you need some money, from where will you get the money? This is the first question. Either you will be having your own money, and if you're not having your own money, what you're going to do? You're going to borrow some money. Correct? So either you will put your own money or you're going to borrow some money. So from where will you get the money? Okay, from where will you get the money? This question is answered by financing decision, which means how you want to finance your capital. Understanding how you want to finance your capital. Whether you want to put your own money, that is called as owner's money, that is called as equity capital. Equity na owner. Owner is putting its money, that is called as owner's money, own money, and outside money. Outside money, it can be debt, it can be it can be debt, it can be convertible debentures, it can be loan from banks or financial institutions. Okay, from anywhere you can finance the money. The first question that answers is from where will I get the money? That is what is called as financing decisions. Okay, so this answers the question from where. Okay, from where will I get the money? So this is answer. Okay, this is answer. Next, when you get the money, okay, next, when you get the money, the next question is, will you just keep the money in the bank account? No, correct? You will not keep the money in the bank account. You are going to, because in a business, you're going to invest somewhere. See, on the money which it is, you're investing in land, you're investing in buildings, you're investing in machinery, okay, you're investing in, okay, you're paying salaries, you're purchasing raw material, which means you're investing in stock as well with me. Yes. So these are all the investments that you're going to make. So the second decision is that which land I have to purchase, which machinery I have to purchase, whether I should invest or not. Correct. Now, suppose I am having two proposals in front of me. Okay. Suppose if I'm having two proposals in front of me, not marriage proposals, but business proposals. Okay. Like either you do business A or you do business B. Suppose you're having two proposals in front of you. Now you have to take a decision. Sir, should I invest in business proposal A or should I invest in business proposal B? So this is one decision you have to take, right? This decision is called as investment decision. Are you all with me? Till now, okay, till now, are you all with me? Yes. Okay, I just want a reply from you all. Zoom students, just give me a reply. Or a thumbs up kodu, or a heart kodu, illana chat kodu. Super, I'm getting it, guys. Very good. Okay. Super. Fine. So now, let's move ahead. So, what I'm going to do with that money? What I'm going to do with that money? I'm going to invest that money. I'm going to purchase some land, some buildings, some machinery, or any investment for that matter. The question arises that should you invest or not? Or if you want to invest, how much should I invest? Or when should I invest? All these questions will be answered in investment decisions. So the first question is, from where will I get the money? Second question is, what will I do with that money? Or where will I put the money? Correct? If you're getting the money, you're going to put the money only, then you're going to get the return. Okay, the return will not be generated out of thin air. You have to put that money somewhere. So the second question, okay, from where will I get the money and where will I put the money? Okay, and this question is answered by investment decisions. So where will I put my money? So where will I put my money? This is the second question. Now, sir, in any business, once an investment is made, okay, once an investment is made, what will happen? That investment will generate me some return. Correct? So first, I will get the money. Okay, that is the first step. And how will I get the money? From where will I get the money? Correct? How much equity? How much debt? How much money I have to finance? All these questions are answered in financing decision. Once I got the money, where will I invest the money? How much will I invest the money? When should I invest the money? Okay, where I should not invest the money? All these decisions will be answered by investment decision. Now, once investment decisions are done, what will happen? The invested amount will generate me some return. Correct? If I invested in some business, that business will give me some operating profit. Yes. If I invested in FD, that FD will give me some interest. Yes. If I've invested in some other person, correct? Some with me, yes or no? So wherever your investment, see, what is an investment? Investment is nothing but commitment of financial resources Correct. I'm just telling you the definition of investment is nothing but commitment of financial resources for a period of time with an expectation of some return, whether monetary or not. Correct. What is the definition? So what does it mean? It just means that you're committing something today for an expectation in future. Correct. You're committing something today for an expectation in future. That commitment is called as investment. If you just if I give a small example that you all can relate, if you all can relate, suppose you are at the verge of making a girlfriend, okay, a boy now making a girlfriend, a girl now making a boyfriend. If that is the case, what you're doing, you're investing something. I'm not talking about money, correct? You're doing recharge for the other person, or you're buying gifts for the other person. That is one investment that is separate, where monetary is important. The second investment that making is your time is getting invested. Yes, your time is getting invested. You are emotionally invested with the other person. Correct? Right? I mean, you'll not be able to sleep in the night. Correct? You are actually emotionally also invested with the other person. So some kind of investment is there. So if that is the investment, that is what we call it as commitment. Correct? I am committed. Why will tell? Because you have some commitment. Commitment means investment. Understanding? Yes. So now, if you are having that commitment, you're doing commitment summa? No. Correct. Otherwise, it is not even. You're doing commitment summa? No. You will be having some expectations. Correct. So that expectation is called as return. Okay. In that case, the expectations are different. Now, let us jump to financial management. So in financial management, you are investing your money somewhere. Correct. Whatever are the finance that you financed. Okay. You're going to invest in the investment decisions. Okay. This is the investment decision. You're going to invest. Say you have choose proposal A. Okay. Business proposal A. Now you have invested your money in business A. My business is textile business, which means a garment shop. Okay, I'm just opening TT textile shop. Okay, I'm just opening that shop. I've invested some money. I've took the shop at rent. I've purchased raw materials. I've hired some people. Lot of investment I did. Now, once the business is operating, my expectation will be to generate sales. My expectation will be to generate profit out of it. Correct? So the next decision is whatever is the profit that is generated from the investment. Should I reinvest the profit again? Question Alangavani. Should I reinvest the profit again or should I take it home? Now, if you're doing a business, there are two choices in front of you. The return that is generated, either you can reinvest it directly again into the business. So 100 rupees invested, 10 rupees is the profit. Again, reinvest the 10 rupees and next time earn profit of 110 rupees. Or you take 10 rupees for, correct? You will be needing some amount also, right? வீட்டில் வைஃப் இருக்காங்க பசங்க இருக்காங்க you would be needing some amount to feed them. Yes, so they can also take the money out of. Okay, they can also take the money home. So the next question is that owner, what I'm talking at from the point of view of owner, so you also take it from the company's point of view. So now shareholders have invested some money. Now that investment is generating some return. So the next question is, should I reinvest that? Should I reinvest that the money? Which means, should I retain my earnings? That is why, we use the word retained earnings. Should I retain my earnings? So whatever the earnings that I've earned, should I retain? So retained earnings means reserves and surplus, which means it is going into the reserves. Or should I distribute it to owners? So a company which is distributing profit, it is called as dividend. What is dividend? Dividend is nothing but distribution of profit. So the question is, should I reinvest into the business or should I distribute it as dividend? So this question is answered by dividend decision, which means what will I do with that return? What will I do with that return? So the first question, from where will I get the money? Second, where will I put the money? Third, what will I do with my return? Correct? What will I do with my return? That is what is dividend decision. So what will I do with my return? What will I do with my return? This is my dividend decision. Now, above that, do you feel any other decision is there for a corporate to make? Okay, any decision for that matter, it will come under the head of financing, investment and dividend decision. Okay, you can think of anything, sir. Employee management. See, what is employee management? That is again an investment decision. Should you hire or not? Correct? Again an investment decision. Anything you take, sir. Should I open a branch or not? That is again an investment decision. Correct? Sir, should I take a loan or not? That is again a financing decision. Sir, I earned this much money. Now, on the earned money, if whatever I've earned money, should I purchase building with that earned money? Again, that is, again, that is an investment decision. So, should I give this much dividend or that much dividend? Again, that is a dividend decision. Now, beyond these three, a business will not have any other decision to take. Or I can say, whatever the decisions the business has to take will be coming under these three heads only. So, if you know how to take financing decision, if you know how to take investment decision, if you know how to take decision, that is what is the coverage that we are going to cover in the financial management. That is the meaning of financial management. So, till now, are you clear? Sir, yes. I just want response, okay? Since, online we are here, so I just want a little bit response also, from the online students. So, I will also not feel alone. Very good. Okay, yes. Okay, fine. Okay, now, so we are good to go. Okay, now we are good to go. Yeah. Okay. So, which means financial management is covered with taking decisions, and we are having three types of decisions: financing decision, investment decision, and dividend decision. These are the three types of decisions that I'm going to take. Next one, whenever you're taking any decision, you will have some objective in your mind, correct or not? Suppose you're taking the decision, sir, I am going to take, now suppose you're traveling, suppose you're traveling. So, sir, should I take bus or should I take a cab? Or should I take an auto? This is one type of decision that you want to take. Now, if you have to take a bus, you know that the next bus is coming 30 minutes afterwards. Okay, so you have to wait for 30 minutes. Plus, bus will stop at each bus stop. So it will be very time consuming. So which means for this kilometer, it will be taken 1 hour to travel from the bus. The second option is that, sir, I will not wait for 30 minutes. I will book an auto or I will book a cab. Correct? Now I will book an auto. So if we book an auto, 5 minutes the auto will be here. And that auto will not stop at every bus stop. Correct? Auto will directly go. Yes. So now that 1 hour travel, I can reduce it to 40 minutes or I can reduce it to 30 minutes. So now it is your option. Correct? What decision you are going to take? Now this decision you are going to take basis some objective. Suppose my objective is that I am having a class at 6 p.m. and right now it is 5:50. So my objective is to reach the class at time. So if my objective is to reach to class at time, what I'm going to do, I will definitely book an auto. I will not wait for the bus. Otherwise I will be late to the class. So this is the objective. If your objective is I'm not having any class, okay, and I have lot of time, and I also have less money, I don't want to, auto means I have to pay 200 rupees, bus means I can, complete it in 20 rupees, so I don't want to spend so much of amount. If that is your objective, you're going to take bus. Clear? So any decisions that you're making, there will be some objective behind taking the decision. Adhivari, financial management is nothing but about taking the decision, but we are having some objectives of financial management. Basis those objectives only we are going to take decisions. So what are the objectives of financial management? Okay, what are the objectives of financial management? We are having two objectives. Okay, we are having two objectives of financial management. So the next one is objectives of financial management. How many objectives we are having? Two objectives we are having. First objective. Okay, the first objective is profit maximization. Okay, the first objective is profit maximization. And the second objective is wealth maximization. Okay, the first objective is profit maximization. And the second objective is wealth maximization. So any decision that you're making, you will take a decision, that decision that will maximize your profit. Now suppose you're having two business proposals in front of you. One business proposal will give you a profit of 1 lakh rupees. Second business proposal will give you a profit of 2 lakh rupees. Which business proposal you're going to choose? You're going to choose business proposal number B. Why? Because here the profit is maximum. So your objective is to maximize the profit. On the basis of the objective, you're taking the decision. Okay, this is the objective, which is profit maximization. Now, what is this wealth maximization, sir? See, traditionally, people were only focused about profits. Okay, traditionally, people were only focused about profits. Now, because the financial markets have developed too much. Now, what is happening? Shares are listed into the companies, correct? We are mostly going to see about listed companies only. So now, shares are listed with the company. Now, profit maximization is not an objective now that managers are concerned about. So they are concerned, but not they are very much concerned. More concerned they are with wealth maximization. So wealth maximization, they are giving more weightage. Correct? Wealth maximization, they are giving more weightage. Why? First of all, what is wealth maximization? See, profit maximization means wherever profit is more, that decision I'm going to take. Wealth maximization is wherever wealth is more, that decision. But the question arises is, what is wealth? See, previously, people were only concerned about profits because public were not interested into the company, which means companies were not listed. There were no lot of listed companies, correct? So because there were no lot of listed companies, public were not concerned about it. They were just if the profit. So management was only concerned about profit. More profit, more earnings I will be having, more earnings I will be having, more satisfaction, tripti I will be having. We are okay. But when public became interested into the company, public is not worried about profit. Correct? Public is worried about how much wealth I am making. If I am investing 100 rupees into the company, will my amount will double or not? That is what everyone is speaking. Now, if people are coming me asking, sir, give one share advice, give one share, share recommendation, sir. So I will not tell, this share, take this share, it is having high profit. They are not even concerned about profit. They will tell, okay, profit is okay, sir. Will I be able to double my money? Will I be able to generate more, wealth with the investment or not? That is what is the question. So, because investors are more worried about wealth, the company is also more worried about wealth. So, wealth means nothing but here, wealth means they are more concerned about the share price of the company. Okay, they are more concerned about the market price per share. Correct? And they are more concerned about market price per share. And profit means the equity shareholders. They are more concerned about earnings per share. Earnings means profit. So what is profit per share and what is market price per share? So to maximize the EPS, the objective is by profit maximization. Profit maximization. Then my objective is to maximize the wealth. The objective is achieved by wealth maximization. That is market price per share. Why, sir? Why they are concerned about market price per share? Sir, profit, if it is more, definitely market price will be more, sir. Profit, it is less, definitely market price will be less, sir. So they both are linked to each other, na, sir. How dare you are talking like this? See, mostly it should be linked. Okay, but nowadays these are not linked also. Now let me just give you an example. Recently, Ola has launched their IPO. Okay, so some time back, it's been a lot of days. So Ola is making loss. Okay, from lot of quarters, Ola is making loss. Even though Ola is making loss, see the share price is increasing. Share price is increasing. So loss means share price should be decreasing, but share price is increasing. Yes or no? Oh, so even like this only Zomato and all were okay. They were just increasing the losses, but the share price will also increasing. Loss means share price should be negative, right? It is not. Okay, it is not correlated like that. So wealth is nothing but market price per share, and market price per share is driven. Okay, market price per share is driven by the demand, the supply, a lot of other quantitative and qualitative factors that we to see in the final stage. But for now, you have to understand that we are having two objectives of financial management. Traditional objective is profit maximization. The modern objective that most of the people are giving more weightage, that is wealth maximization. So two objectives of financial management. Most questions are asked from here. Objectives of financial management. So you have to write, sir, first objective, profit maximization. Second objective, wealth maximization. Okay, if you can read from the textbook, you all can read these texts. Okay. So till now, sir, are you all with me? Are you all with me? Okay, Sumba, if you can just give me a thumbs up, I will be very much comfortable. Because I don't want to feel alone. Already I'm lonely. If you guys are also, not responding to me, I will become alone. Okay. Fine. Very, very good. So I'm getting some replies. Okay, I'm getting some replies. Now, what I want you to do, okay, so till now, see, right discussion we are making, right discussion we are making, but trust me, this discussion will help you in this discussion will help you in furthermore developing all the concepts. If I directly jump into the chapters, right, chapter 1, vision analysis, chapter 2, leverage, this will not be a helpful discussion. First, I want to build a foundation. I want to build a flow. Once you enter into the aura of financial management, then we are going to enjoy the subject. Okay, then we are going to enjoy the subject. Okay, now what I want you to do is that all this that I've discussed, right, it is covered in chapter number 1. Okay, all this that I've discussed is actually covered in chapter number 1. So what I want you to do is that for now, just for 5 minutes, okay, just for 5 minutes, take out your textbook, okay, take out your textbook, just have a plain reading, okay, just have a plain reading of meaning of financial management, okay, types of decisions and objectives of financial management. Are you all with me? Just give me a thumbs up. Yes, for 5 minutes, okay, so 5 minutes, just have a plain reading. So this will also be a relaxing time for you, and you are also taking some concepts inside your mind. Are you all with me? Yes. So it is just a 5 minutes. It is not a break. Okay, 5 minutes. It is not a break. 5 minutes I'm giving you. Take out your textbook. Okay, you are going to relate whatever I've discussed, right? In textbook language, it will be there in your study material. Once you read it, okay, so what will happen is that a concept will be tied to your mind. If you're only listening to me, the concept is right now floating in your mind. Once you read with the textbook, it will be tied with your mind, correct? Then retention is my responsibility. Okay. So for now, I'm giving you some 5 minutes of time. Okay, 5 minutes of time. Right now it is 7:21. Okay, so 7:26. Okay, some 5 minutes of time you take, and you have a plain reading of the study material. Give me a thumbs up. Everyone, give me a thumbs up now. Give me a thumbs up. That shows that yes, I am reading. Amit, Amrita, Afan, give me a thumbs up. Very good. Okay, fine. Okay, so now I'm giving you 5 minutes. I'm giving you 5 minutes. Have the textbook reading. Okay, so I hope you all have read the study material. Just give me a thumbs up. Okay, fine. Okay. Now, see, this is what, okay, this is what is chapter number 1. Okay, so if I just, so this is what is chapter number 1, which is nothing but scope and objectives of financial management, and this is what we were discussing. Okay, so the first question that we were just answering is, what is the meaning of financial management? Sir, why are you again gaping us? Because we should also be aware of the study material language. In the examination, writing on our own will not work, but writing the language of study material will be work now. Okay, so first one, managerial activity. I already told you, financial management, the work that a managers will do. So managerial activity is nothing but taking decisions. Okay, planning and controlling of firms' financial resources. Financial resources means money. So they are just using the words. So it is a managerial activity which is concerned with planning and controlling of firms' financial resources. So which means taking decisions related to financial resources. Financial resources means money, in order to maximize the shareholders' wealth. Okay, so that is what is the main objective. If an MCQ question is asked, what is the main objective of financial management? Okay, what is the main objective? And the options will be profit maximization, wealth maximization, both A and B. Okay, both A and B, or none of the above. Okay, or none of the above. You should not write both A and B, even though the both are objectives of financial management. But what is the main objective of financial management? That is wealth maximization. So wealth maximization is the main objective of financial management. Yes. Okay. Next one. Okay, so next one will be, so the next one, I already told you aspects of financial. So the next discussion that we are going to make is how many types of decisions are there. So investment decisions, financing decision, and then dividend decision. Okay, this is what something that you have to read and you can write on your own. It doesn't mean that you have to write entire textbook language, but yeah, the bold sentence you have to write at least. Okay, so you have to show to the examiner, right, that yes, I read the study material. So you have to write the bold, which means selection of asset in which, okay, in which I have to invest the firm, okay, in which I have to invest the money or funds. So selection of assets in which funds will be invested by the firm is investment decision. Acquiring the optimum finance. Okay, so how much of finance have to acquire? So acquiring the optimum finance, so that is what is financing decision. And the third one will be a dividend decision. So it requires how much and how frequently, okay, how much and how frequently I have to pay dividend, or I have to pay cash to, okay, out of my profit. So this is what is dividend decision, which means how much to pay, how frequently I have to pay, correct? So that is what is dividend decision. So these are the three types of decisions, okay, that we have to take. The next one that we discussed, okay, the next one that we discussed is objectives of financial management. One is profit maximization and the other one is wealth maximization, and this is something that you have to write on your own. Idala I will discuss in the last. Okay, this is a very important thing, okay, which is nothing but, okay, this is nothing but problems in what are the problems if we follow profit maximization. So here we are having some 4 points. This is something that I'm going to discuss in the end, because this purely what is written in the study material you have to write only, then you will get 4 marks. Or if a 3 mark or a 4 mark problem is asked, you have to be dancing inside the examination hall if this problem is asked. So that is the reason I'm going to take, towards the end, wherever memory is required, that I'm going to take towards the end. For now, what I'm going to take is that wherever, okay, wherever wherever the foundation is needed, that is what I'm taking now, because without foundation we should not go ahead. Okay, sir. So this much, okay, wealth maximization. Wealth maximization is nothing but shareholders' wealth. Okay, the shareholders' wealth. That is what is wealth maximization. Okay, so till now, okay, so till now is something that you have read. Okay, till now some things that you have read. I just want to give you a simple thing. See, in the illustration, you have two options. Or you have two proposals in front of you. One is product X, one is product Y. So in all the 5 years, product X is giving you 15,000, 50,000, and product Y is giving you 55,000. Correct. So with an objective, what you are going to choose, sir? Project X 50, project Y 55. I will choose 55. So profit maximization will tell you that I have to choose 50, product Y. But if you see, okay, if you see, maybe product X is that I want to sell clothes, and product Y is that I want to sell drugs. Just an example, correct? So the risk is more in drugs. That is the reason the return is more in drugs. Now the next question is that whether wealth is maximized or not. Suppose you are doing the business of drugs. Okay, you're doing the business of drugs. Tomorrow the government, raids you, and if you come into the newspaper, your your share price will come down. Now if your share price is coming down, your wealth is also coming down. So that is the reason there is a risk. You're not going to take that decision, correct? So your decision is changing on the basis of objective that you're following. So profit should also be taken care of, and wealth should also be taken care of. So decisions we have to take on the basis of wealth maximization majorly. Okay, the major focus should be wealth maximization. Okay, just a small example. This is something, okay, so there are some 2-3 important questions that we are going to discuss in the end. One is the role of finance executive or the role of CFO. This is the question multiple times they're asking. Second one is the limitations of profit maximization. Other 4 points are there. That is the question that they're very much asking. So for now you can just have a reading. Okay, at the end I'm going to give you the memory things also for the theory chapters. Okay, for the theory chapters. So with this, okay, with this our chapter number 1. Okay, see, I always do that. Okay, I always do that. We always have to celebrate small victories, correct? It is not that only big victories have to be celebrated. We have to celebrate smallest of the smallest victories. So what does it mean, sir? Now our chapter number 1, which is introduction to financial management, is completed, it means we have to celebrate with the claps. Are you all with me? So even though you are sitting virtually, or even Google Drive students who are seeing, correct, up there, you just have to clap. You just have to be happy, you have to clap. If anyone is seeing you, maybe he is thinking that you're mad, so don't think, okay? You have to clap that. Yes, chapter number 1, Introduction to Financial Management, is completed. Are you all with me? Yes. So have a clap, okay? Everyone, even online students, or clap emoji podu. Okay. So usually what I am going to do, I used to celebrate by just taking a sip of water. Okay, this is a kind of satisfaction that I get. Hello, online students, are you all with me? Okay, don't make me feel alone. If you are with me, very good, super. Okay, now. Okay, so this is my way of celebrating. You can do anything, but okay, you can purchase a dairy milk. With every one small celebration, one bite of dairy milk you will take. Okay, anything you have to take, but make study interesting, pa. Okay, this is what I used to say. Make study interesting, make study more enjoyable. Don't think or don't take it as a pressure. That is what is, is my advice will be. Don't think that, sir, we are studying this much, sir, it is a pressure for me, sir, I'm not able to handle this pressure, sir, my head is aching, sir. Correct, these kind of things, that too at this age. Okay, you should never be having, at any age for that matter, you should never be having that tension. Always think, okay, always think that you are like a kid. Okay, you are like a kid. And how a kid, even for a smallest of the thing, the kid will be happy. For example, ஒரு 6 months kid, ஒரு 5 months kid, okay, ஒரு 8 month kid கிட்ட நீ பேசும்போது, you just make some faces like that and the kid will be laughing. Correct? Or you just touch the kid here, the kid will be laughing. He is not knowing what is happening, but he is just feeling happy. Correct? Because for him, okay, for him, someone touching is a celebration. Or someone just, you just give some small sweet, okay, they will start laughing, okay, or they will be enjoying that. So that is what, that is what is something that we also have to have this habit. That is the reason kids don't have depression, kids don't have anything. Yes, all the depression and all is only diagnosed at a very later stage of part. So okay, my advice would be, don't take any pressure. Okay, don't take any pressure for studies. Sir, why we should not take pressure, sir? We are having examination in this much days. Don't take any pressure. Taking pressure will only be negative for you only. How it is negative? Taking pressure will bring your, okay, you bring your morale down. If your morale is down, you will not have energy, you will not study. So end of the day, it is like a loss only for you. Correct? So it is not gaining you anything. So there is no use in taking pressure. If so, how, okay, how, I used to tackle this is that I used to celebrate my small victories. So once I celebrate my small victories, what will happen is that I will not be taking lot of pressures and all. Okay, I will not be taking lot of pressures. Even if today I didn't study anything, I'm just sleeping, doesn't matter. Okay, doesn't matter for me. What I'm going to do is that tomorrow I will study well. Okay, or what I'm going to do is that I'm just going to celebrate, okay, all the small victories that I want to make. Once you celebrate, because our mind, okay, this is our mind will work. Our mind will create dopamine. Correct? Now, for example, one chapter is completed. Your mind, now because you're celebrating, your mind will generate dopamine. Now that dopamine will give you some happiness. Now, once that happiness is created, your mind will again ask for that happiness. So, when you will get that happiness, when you will complete another chapter, correct? So, for that dopamine rush itself, you will do the other chapter. And in the meantime, I will also give you some tips and tricks how to study and all, but slowly, okay, but slowly I'm going to give you. Okay, so for now, chapter number 1 is completed. Now, let us move, okay, let us move ahead. But this chapter number 1 is just to the extent of foundation, okay? Now everyone, okay, now everyone, alaga par, okay, alaga, now you gavani. How I calculate profit, sir? Okay, how I calculate profit? Profit is nothing but, okay, profit is nothing but income minus expenses. Correct? Profit is nothing but my income minus expenses. What is my income? My sales will be my income. What will be my expenses? All the cost will be my expenses. Correct? So nothing, profit is nothing but sales minus cost. So what is profit? Sales minus cost. Okay, sales minus cost is profit. Now here, okay, here on the basis of nature, the cost is bifurcated into two. Okay, on the basis of nature, the cost is bifurcated into two. One is a variable cost. So cost means variable cost plus fixed cost. Okay, but cost means variable cost plus fixed cost. Sir, what is a variable cost? The cost that varies with volume. The cost that varies with sales, that is called as variable cost. That cost that does not varies with volume. The cost which does not varies with sales, that is called as fixed cost. Sir, give me some examples, sir. Suppose I am in the business of making juice. Okay, I am in the business of making juice. Say mango juice for an example. I usually give this example only. So mango juice. So the cost of mango, that is the raw material, that is a variable cost. How, sir? Because the cost of mango moves with sales. How? If I'm selling one bottle, I need one mango. If I'm selling two bottle, I need two mango. If I'm selling 10 bottle, I need 10 mangoes. So the cost is increasing as and when the sales is increasing. The cost will decrease as and when the sales will decrease. The cost that is proportionate to sales, that is called as variable cost. Say the cost of empty bottle, say the cost of cap, say the cost of the packaging, the cover that you're making for the bottle, say the delivery cost. Okay, say the delivery cost. All these are variable cost. More the sale, more will be the cost. Less the sales, less will be the cost. That is called as variable cost. Sir, what is fixed cost? The cost that does not move with the volume. For example, you are paying rent. Rent is a cost. But is it the case that if the sales is increasing, your rent will also increase? Correct? A factory rent. Factory, even if you're producing one bottle or if you're producing 1,000 bottles, rent will be same. Correct? So rent is a fixed cost. Paying salary. You are producing one. Okay, you are producing one bottle, or you are producing 10 bottle, or you are producing 10,000 bottle. Accountant salary will vary or not? No. Accountant salary you have to pay the same. Yes or no? Or any salary. Okay, or any admin cost that you're making, all comes under the fixed cost. So now cost is bifurcated into two. One is variable cost and one is fixed cost. Variable is a cost that varies with the volume. Fixed cost is a cost that does not varies with the volume, that remains fixed. Correct? It does not vary at all. So that is called as fixed cost. So any cost that moves with sales is variable cost. Any cost that does not move with sales is fixed cost. Till now, are you all having clarity? Yes, sir, I'm having clarity. Yes. Hello, online students. Yes. Give me a reply, pa. Or thumbs up kudu, or thumbs up kudu. Very good. Okay, okay, fine. I'm getting replies. Super. Okay, now. Okay, super. Okay, sir. Now what I'm doing here is that this format, correct? இது ரொம்ப fat format. Slim format கொண்டு வர, correct? This is a fat thing, that profit is equal to sales minus cost. Cost is equal to variable cost plus fixed cost. What I'm going to do, I'm just, trying to slim it down. Sir, what are you trying to do? Which means nothing. Okay, well, sales minus cost is equal to profit, right? So what I'm going to write, sales minus two types of cost is there, variable cost. So sales minus variable cost minus fixed cost is equal to profit. Nothing but that chart I am writing in list, correct? Sales minus variable cost minus fixed cost is equal to profit. The profit that I'm having because of the operations of my company, I call it as operating profit. Correct? What is this profit? This is my operating profit, because this is the profit that I'm earning because of the operations of my company. My operations are there, my profit is there. No operations, no profit is there. Correct? So the sales is also an operation. The cost for the operation is my operating profit. Sales minus cost. Okay, this is nothing but your operating profit. So this the same thing, sales minus variable cost minus fixed cost is equal to profit, operating profit. I'm just writing. Now sales minus variable cost, I'm giving a name, contribution. Okay, well, sales minus variable cost, I'm giving a name, contribution. Why, sir? Because this is the amount. Okay, this is the amount that is contributing to the fixed cost, and it is also contributing to the profit. Okay, that is why it is called as contribution. How, sir? What are you trying to do? Okay, suppose you're having a sale of 100. Okay, suppose you're having a sale of 100. Now you're having 40% is your variable cost. So what is your contribution? 60 rupees. Okay, what is your contribution? 60 rupees. Now 30 rupees is your fixed cost. What is your operating profit? 30 rupees is your operating profit. Okay, for now. Okay, I'm just giving you these small examples. Now, how much is your profit? 30 rupees is your profit. Now try to visualize. Okay, but try to visualize. Variable cost, I can write it as percentage. Okay, variable cost, I can write it as percentage. Why? Because variable cost is a variable cost. It varies with sales. So I can tell 40% is my variable cost. Okay, I can tell 40% is my variable cost. But fixed cost, I cannot tell 30% because fixed cost does not move with sale. So it is wrong to write it as a percentage. Fixed cost will always be written as number. Basic things I'm telling you. Okay, so fixed cost will usually be given in numbers only because it does not move with sale. So 40% is my variable cost. What does it mean? If I am making a sale of 10 rupees, 40% of the 10 rupee will be my variable cost. If I am making 100 rupees sales, 40% of 100 rupees will be my variable cost. If I am making 1000 rupees sales, 40% of 1000 rupee will be my variable cost. Sir, what does it mean? For 100 rupees sale, 40 rupees will be the variable cost. So the remaining amount that I will be having is 60 rupees. For 10 rupees sales, 4 rupee will be the variable cost. So the remaining amount 6 rupee will be my 6 rupee will be remaining in my hands. Now visualize. Okay, this alone you visualize. Okay, be with me and trust me. This alone you visualize. Sir, okay, everyone. Okay, now if you are just keeping your hands like this, okay, you're just keeping your hands like this. Now I am putting 100 rupees here. Okay, I am putting 100 rupees in your hand. Now, if you are, which means sales, okay, you have made a sales of 100 rupees. So when you're making a sales of 100 rupees, say raw material persons, okay, raw material, you have to purchase raw material. 40% is the cost of raw material. So 40 rupees will go out. 40 rupees will go out. Now what is remaining? What is the amount that you can see in your hands? What is remaining? 60 rupees in your hands. Correct? 60 rupees is in your hand. Now is it your money? Is it your profit? No. You have to pay some fixed cost also. Say for an example, rent. Okay, you have to pay 30 rupees. So this 60 rupees that you're having, right? Out of this 60 rupees, you have to pay rent of 30 rupees. Now what is the remaining amount which is in your hand? 30 rupees is remaining in your hand. What is this 30 rupee? Is this your money? Yes, that is my money. That is what I call it as profit. Are you all with me? Sir, why are you telling all this? Now take one more example. Okay, take one more example. Suppose you are having 50 rupees in your hand, correct? Sales 50 rupees when you're selling, 40% is the variable cost. So which means 20 rupees is your variable cost. Okay, 50 into 40% 20. So 50 and the 20 gone. How much is there in your hand? How much is there in your hand? 30 rupees is there in your hand. Are you all with me? How much is there in your hand? 30 rupees is there in your hand. Now is this 30 rupees is your amount or not? No sir, 30 rupees is not your amount. I have to pay rent also. So how much is the rent? 30 rupees is the rent. Now the amount that you're having, 30 rupees is gone. What is there in your hand? Nothing. Empty. Correct? Empty. Everything is gone. Correct? You're just having empty bowl in your hand. So which means 0 rupees is there in your hand. So no profit, no loss. Now with this, okay, with this, one more 10 rupees coming. Alaga Gavani. One more 10 rupees coming. Okay, till now 50 rupees sale was there, right? Now one more 10 rupees coming, your sale is becoming 60. But now one more 10 rupees coming. Now for that 10 rupee, how much you have to pay variable cost? 4 rupee variable cost you have to pay. How much is remaining in your hand? 6 rupees is remaining in your hand. Do you have to pay any rent? No, rent already paid, correct? Now this 6 rupees is completely your profit. Understanding? This 6 rupees completely your profit. Yes or no? So which means, sir, 60 rupees ka 6 rupees is the profit. Understanding? 60 rupee how much will be your profit? 6 rupee will be your profit, which means one more 10 rupees coming. 4 rupee gone, 6 rupees, so 12 rupees. One more 10 rupees coming, correct? One more 10 rupees coming, 4 rupee gone, 6 rupees, so 18 rupees. So which means, sir, 5. So 3 10 rupees coming, 80 rupees. So for 80 rupees, 16 rupees, sir, my profit is 16 rupees is my profit. Check pani pagla. So if 80 rupees is my sales, how much is my variable cost? Okay, so 40% of 80. What is 40% of 80? Chelakutis, what is 40% of 80? 32. Correct? 32. Now if I'm okay, 32 apa? Yes, okay, so 32 rupees. 6 6 12 6 12 18, but not 16. Okay, 18. 6 rupees, then what, for one more 10 6 rupees, for one more 10 6 rupees, so 18 rupees will be my profit. Okay, so we are just checking is the profit is 18 rupees or not. So 80 rupees is my sales,
For that 80 rupees, 40 percentage will be my variable cost. So 80 minus 32, what is the amount? 80 minus 32 will be 48 rupees. Correct? Correct? 48 rupees is your contribution. So this is your sales minus variable cost. So contribution is 48 rupees. From this 48 rupees, if you're minusing the fixed cost, how much amount is remaining? 18 rupees. This 18 rupees is what is the profit. Correct? This 18 rupees, what is the profit? Sir, how we are arriving at this number, sir? 50 rupees, I am having no profit. Now, whatever the amount that I am earning, correct? Whatever the amount that I am earning, the contribution, correct? 10 rupee I am earning, 4 rupee gone. So 6 rupees is the contribution. Entire contribution goes to my profit. Understanding? Entire contribution goes to my profit. Before 50 rupees, okay? Before 50 rupees, entire contribution was not my profit. I have to pay some fixed cost also. After 50 rupees, entire contribution is coming and setting into my profit. Sir, what are you trying to tell, sir? That 50 rupee is my break-even sales. That 50 rupees is my break-even sales. What is a break-even sales, sir? A sales where my profit is zero. Correct? A sales where my profit is zero. Or I can tell the sales where I am recovered all my fixed cost. The sales where I recovered all my fixed cost, that amount of sales is called as, okay, that amount of sales is called as break-even sales. So 50 rupees is my break-even sales. Sir, which means after break-even, whatever you are earning, entire contribution is coming to your profit. Before break-even, whatever you are earning, okay, whatever you are earning, entire contribution was going to your fixed cost recovery, which means this amount contribution is contributing to your fixed cost and this amount is contributing to your profit. That is the reason it is called as contribution. Understanding? Hello, okay, if you're understanding, okay, you have to clap hands. Yes, sir. Why this is called as contribution? Because this 100 minus 40, 60 rupees is contributed towards the fixed cost and then it is contributed towards the profit. That is the reason it is called as contribution. So it is nothing but fixed cost plus profit. Contribution is equal to fixed cost plus profit. This is the amount which is contributed to my fixed cost first and then contributed to my profit afterwards. So till break even, my contribution will be going towards the fixed cost. After break even, okay, after break even, my contribution will be contributed towards the profit. So my total contribution is equal to my total contribution to fixed cost plus my total contribution to profit. So contribution is equal to fixed cost plus profit. Fixed cost is 30, profit is equal to 30, 60. That 60 is what is my contribution. Are you all with me? Yes. Okay, I want this. Now I want you all, sir, slowly, okay, slowly, vibe is coming, right? Vibe fill up a vibe. Yes. So slowly, are you all going into the aura of financial management? Super, super, very good, sir. Till now, sir, till now I am understanding. Yes. So till now our understanding is clear. So, okay, so now, just a moment. Yeah. Okay, sir. So what you are trying to tell here is that, sales minus variable cost is called as contribution. Contribution minus fixed cost is your operating profit. Okay, it is your operating profit. Okay, if your sales is 100, your variable cost is 40, your contribution is 60, your fixed cost is 30, and you are having an operating profit of 30 rupees. So till now, this is what I call it as income statement. Okay, this is what I call it as income statement. So income statement is the first step of discussion. Okay, this is what I call it as income statement. Since this is the first class, okay, I will go little slow. Okay, little slow, just to get into the vibe. Okay, just to get into the vibe of financial management. Okay, you should be enjoying the subject. Okay, are you all getting that enjoyment? Yes, you should be getting. Okay, maja, that enjoyment you should be having. Yes, so if you're having that enjoyment, adukkaga little bit slow I'm going. Once you take my speed, okay, or once you pick up the pace, slowly tuck, we will be completing the chapters. Okay, tuck. You all will be not knowing, in no time we will be completing a lot of chapters, but for that you have to come to a pace, and the pace I'm building now. Okay, I'm building the foundation. I'm keeping blocks in it just to build that base. Okay, and the rapport build pandradhukku. Okay, right now it is just we are building on the rapport. Okay, sir. So sales minus variable cost is contribution minus fixed cost is equal to your operating profit. Okay, till now I hope that you guys are having no doubts, sir. Okay, no doubts. Now next, okay, now next one, sir. Idila or because of the operations of my business, correct? Idila or because of operations of the business. Now the next one, okay, now the next one, say for the operation I would be needing some capital, correct? To do that operation I would be needing some capital, say 100, okay, say or 1 lakh rupees is my capital nu vechiko, correct? Now the question is that this 1 lakh rupee I can either fully invest on my own. This 1 lakh rupees I can either fully invest on my own or I can take some borrowed amount also. See, and the 1 lakh rupees la 50,000 rupees I have borrowed, 50,000 rupees I took on my own. Now if someone is giving me the amount for free, no, I have to pay some interest also, correct? Now this interest is not because of the operations of the business, correct? This interest is not because of the operations of the business, but interest is a cost. So interest is a cost. So this cost is called as non-operating cost or non-operating expense, correct? Non-operating expense. Because of non-operating expense, my operating profit will not change. So any interest that I'm paying, right, this will come here, correct? This will come here because this 30 rupees is my profit from the business. This 30 rupees is my profit from the business. Now this profit, say I would have earned after investing some 1,000 rupees. Okay, after investing some 1,000 rupees I would have earned this 30 rupees. Now the next question is, who invested this 1,000 rupees? If you have invested this 1,000 rupees, entire 30 rupees you pocket. If this 1,000 rupees you have invested only 500 rupees and 500 rupees you took loan. If 500 rupees you took loan, for this 500 rupees, whatever is the cost that you have to pay from this profit, correct? Understanding? So this 30 rupees is not entirely your money. You cannot pocket because you have taken a loan of 500 rupees. Okay, because you have taken a loan of 500 rupees. So this entire, okay, this entire profit you cannot take. Okay, this entire profit you cannot take. You have to pay interest also. Okay, you have to pay interest also. Sir, how much is the interest that I'm going to pay? Okay, how much is the interest that I'm going to pay? ஒரு எக்ஸாம்பிள்காக வச்சுக்கலாம், ஓகேவா? ஒரு எக்ஸாம்பிள்காக it is 500 rupees, right? 20% is my interest. For example, okay, 20%. I took the loan at 20% rate. So I am paying interest of 20 rupees. Okay, I'm paying interest of 20 rupees. Now what is my remaining? 10 rupees. This is my profit, correct? This is my profit, sir. 10 rupees is my profit, sir. Okay, 10 rupees is my profit. Why interest 20 rupees? Okay, let me keep it 10. Okay, anyways, okay, 10 rupees is my profit. Now this profit again I can entirely pocket. No, okay, I'm going to tell you there is some hidden partner also there. Whenever you are earning profit, right, some person will come with a bowl, give me tax, government. So you have to pay some amount to the government also, right? Now this 10 rupees entirely you cannot pocket. There will be some government, okay, whom you have to pay taxes also. Okay, so share of profit, because government is an indirect partner for your company. Okay, partner kadana we will give share of profit. So government is like an indirect partner for your company. Okay, even though there is no partnership agreement, okay, still, okay, even though we didn't ask government you become the partner, but still, okay, they are the partners. Okay, no ways, okay, they are the partners. Now because they are the partners, we have to have our share of profit to them also. So which means I am paying some taxes also. So this is the profit that I'm earning, but this is the profit before taxes. So I will call it as PBT, okay, profit before taxes. Now from this profit before taxes, I have to pay some taxes. Say my tax is 50%. So I will pay 50% tax on the profit. Correct? So 10 rupees is my profit. I will pay 50% tax. So 5 rupees is my tax and the remaining 5 rupees is my profit. So this is what I call it as profit after taxes. So this 5 rupees is my profit after taxes. Okay, sir. Clarity? Yes. Okay, so are you all having clarity? Yes or no? Okay, so I want a reply. Okay, I want to reply super. Very good. Okay, very good. Sir, which means, okay, which means you also introduced some other items also here. Okay, some other items also here. Okay, item means this, okay, not something that you're thinking. Now, sales minus variable cost is equal to contribution. Contribution minus fixed cost is equal to your operating profit. Okay, operating profit minus interest is equal to profit before taxes, minus taxes is equal to profit after taxes. Now this, okay, this I also call it as earnings before interest and taxes, EBIT, because this is the earnings before interest and before taxes, correct? This is the earnings before interest and before taxes, so I can also call it as EBIT. So it is also called as operating profit, it is also called as EBIT. So EBIT is nothing but operating profit. Sir, அப்படினா sales minus variable cost is contribution, minus fixed cost is EBIT, minus interest is profit before taxes, minus taxes is equal to profit after taxes. Okay, profit after taxes. This is the profit for the company. Okay, but this is the profit for the company. Now this is the profit for all the companies. Now if I am the shareholder, I want to know what is my profit. Understanding? I want to know what is my profit. So which means I will calculate profit per share. It is also called as earnings. Profit na earnings, correct? So earnings per share. So which means total profit divided by number of shares is equal to earnings per share. Which means if I divide this by number of equity shares, okay, if I divide this by number of equity shares, suppose I'm having 5 shares, okay, take all the numbers in crores, so 100 crores, so 5 crores is my profit, and I am having 5 crore shareholders, so I'm having 5 crore, not shareholders, 5 crore shares. If I'm having 5 crore shares, what is my earnings per share? 1 rupee is my earnings per share, correct? So every shareholder is earning 1 rupee. Okay, 1 rupee is actually a very big amount. Okay, if I'm having 5 crore shareholders, 1 rupee is a big amount because my total profit is 5 crore rupees. Understanding? So 1 rupee is, I call it as EPS. It is also called as earnings per share. Sir, which means sales minus variable cost is equal to contribution, minus fixed cost is equal to operating profit or EBIT, minus interest is equal to profit before taxes, minus taxes is equal to PAT, divided by number of equity shares is equal to EPS. This is what is income statement. Okay, this is what is income statement. Are you all having clarity? In the income statement is the basic of financial management. Okay, this is what is the basics of financial management. I'm going little slow. Okay, bear with me. Slowly the pace will increase. Okay, so this is what is my income statement, and this is what I call it as income statement. Now your work is to analyze this income statement. Okay, your work is to, now from this income statement, okay, from this income statement you're looking that, okay, for 100 rupees sales that I'm making, I am earning a profit of 5 rupees, correct? I am earning a profit of 5 rupees. So for 100 rupees of sales, I am earning a profit of 5 rupees. Are you all with me? So suppose, okay, suppose you're the CFO, you're the CFO of the business. What you're thinking is that, sir, I want to increase the profit. So what you will do to increase the profit? You cannot reduce the cost and all, correct? You cannot reduce the salary, you cannot reduce the cost of the mangoes. So you're thinking that I will increase the sales of the company. Okay, then you're calling your marketing team that, yes sir, we want to increase the sales. What we can do? I am into the business of making mango juice. Okay, let us take an example. I am into the business of making mango juice. So this is the income statement of a mango juice company. Okay, this is the income statement of a mango juice company where I'm making a sale of 100 crore rupees. Okay, have the number in crores, have it in mind in crores. So 100 crore rupees is my sales. For the sale of 100 crore rupees, 40 crore rupees is my variable cost. I am having a contribution of 60 crore rupees, and then I'm having some fixed cost of 30 crore rupees. If I minus my fixed cost, I'm getting an EBIT of 30 crore rupees, from which I will pay interest of 20 crore rupees. which will give me a profit of 10 crore rupees. Out of this 10 crore rupees, 5 crore rupees is the taxes that I'm going to pay. The remaining 5 crore rupees is my total profit of the company. That is earnings available to equity shareholders. So this 5 rupees is also called as earnings available to equity shareholders. Now, if earnings for the shareholders divided by number of shareholders, I am going to get EPS, earnings per share. Okay, earnings per share. This is what. Now, sir, I want to increase my sales, sir. Okay, I want to increase my sales. What I am going to do? Okay, so we were just brainstorming. Sir, if you want to increase your sales now, you just keep some brand ambassador for your company, sir. Okay, you should just keep some actor or actress as brand ambassador of the company. Once the brand ambassador is coming, your sales will be increasing. Okay, then what I am doing? Okay, what I am doing? Alaga Gavani. Okay, just this story. What I am doing? I am calling Katrina Kaif. Okay, I am calling Katrina Kaif for my mango juice company. Okay, I am calling home Katrina Kaif. Okay, I am calling Katrina Kaif. Now, Katrina Kaif is coming to my office. Okay, Katrina Kaif is coming to my office. So now Katrina Kaif is sitting in front of you. I'm telling, hey Kat. So we are, we are a mango juice company. Now we want to, we want to keep you as a brand ambassador of the company. Okay, we want to keep you as a brand ambassador of the company. So will you be interested or not? So somehow Katrina Kaif became impressed of me. I don't know how, why, okay, what she saw. So Katrina Kaif became impressed of me. Now she's telling that yes, Tawfiq, I will become the brand ambassador of your mango juice company. Okay. Now the negotiation term is coming. Now I am asking Katrina Kaif how much you want. I mean, what is the fees? Okay, what is the fees of this brand ambassador? Okay. Katrina Kaif, ரொம்ப intelligent, okay, ரொம்ப smart. Katrina Kaif என்ன சொல்றான்னா, Katrina Kaif is telling that I don't want a fixed cost. Okay, and the 1 lakh, 2 lakh, 3 lakh rupees, I don't want a fixed cost. I want a variable cost. Everyone got stopped. What variable cost? What? So what Katrina Kaif is telling, see, when I will become the brand ambassador, Alaga Gavani, when I will become the brand ambassador, because of me your sales will increase, right? Okay. Because of me your profit will increase, right? Okay. So whatever is the increase in profit because of me, Katrina Kaif is telling like that, whatever is the increase of profit because of me, adula 50% share you give me. Enna or deal paru. Correct? Whatever is the increase in profit because of me, you give me 50% of that amount. Everyone shocked. Katrina Kaif rocked. Yes. So what is happening? Okay. So I am okay. I was just sitting. Okay. I was just sitting. I am just asking. So Katrina Kaif, right now we are making a sale of 100 crore rupees. Okay. Right now we are making a sale of 100 crore rupees. So she is asking you a question, how much profit you are making? I am telling that 5 crores is the profit that we are making. Okay, 5 crores is the profit that we are making. So Katrina Kaif is telling, see Tawfiq, the deal is very simple. Okay. If your profit is, if your sales is increasing, your profit will also increase, right? I am telling, yes, if the sales is increasing, the profit will also increase. Okay, she's thinking she's very smart. Okay, she don't know I am a chartered accountant. So, okay, sales is increasing, profit is also increasing. So, she's telling that, see, right now your sale is 100 crore rise and your profit is 5 crore rupees. So, if your sale is doubling, say your sales is 200 crores, your profit will be 2 times. Your profit will also be doubled, right? So 5 crore rupees is the profit. Now 10 crore rupees will be your profit. That 5 crore extra profit you earned because of me, right? That 5 crore extra profit you earned because of me, right? Adala 50%, 2.5 crore rupees I want. Understanding? Yes. And the deal Purida, that is what Katrina Kaif is telling. I am sitting and understanding. Okay. So you mean to say that whatever is the double of sales, that I have to, whatever is the percentage increase in sales, that percentage increase I have to do in profit also. And on that increase amount 50% you want. Is that is your deal? She's telling yes. Okay, she's telling yes. So 50% is a very big amount. Companies thinking like that 50% is a very big amount. Okay. I was just thinking, I was just smiling. Sorry, okay. All the company persons are telling that Tawfiq, no, don't take this deal. Tawfiq, don't take this deal. Okay. I am telling that, hey Katrina Kaif, let us have a small conversation together. Okay. So we both are going alone, okay, in a conference room, just having some conversation, because I just wanted to understand more, okay, nothing else. I just wanted to understand more, okay, what Katrina Kaif is trying to tell. Then once I understood, okay, after some 15 minutes, Katrina Kaif came out of the conference room very happy. And all the other persons were angry. Okay, what has happened? Why Katrina Kaif is coming happily? I am also coming outside the conference room. I am more happier than Katrina Kaif. Okay, now people are becoming more angry. Oh, why Tofik is more, happy? Then, okay, I am telling that, yes, I am agreeing with the deal. The CEO of the company, the directors of the company are looking in anger. Tofik, how did you agree 50%? This is a very big amount. We cannot afford this amount. What are you doing? What I am telling is that, don't worry. Trust me, pa. Okay, but trust me. Okay, don't worry. Trust me. Okay, va. And these people trust me. So they said that, okay, because of you only, I'm agreeing to that. Okay, va. I don't want any kurkal in this. I said, no, pa. Okay, but nothing will be there. Okay, you just, okay, 50% is 50% worth. I tell them. They're telling, pa, I'm telling that 50%. I'm going to deal worth, pa. Okay, 50% I'm pay panilla, not an issue. So CEO is telling 30% agree பண்ணப்பா, ஏப்பா 50%, 30% நம்ம கொடுக்கலாம்ப்பா, ஓகேவா, 70% at least we should keep in our pocket. I said that no, 50% we are giving. Everyone became angry, but I just consoled everyone, okay, no worries, okay, you don't have to worry, okay, I'm going to handle all these things. Now next day Katrina Kaif is again coming for the shoot, okay, and the shoot kaga. Now the shoot was so good, okay, the shoot was so good. So she has, shoot the advertisement, our mango juice, and the slice of the advertisement, Patrick. Yeah, you see the advertisement of the mango juice. She's just holding like this. Okay, the mango is like, okay, and the droplets of the juices is falling like this. Okay, and she's just drinking mango juice, and the mango juice, half it is going inside her mouth, half, and the lips valiya அப்படியே கீழே போகுது. So that, okay, that is the advertisement she is making. Super advertisement she is making. Okay, I also become fan of that advertisement. The droplets that is falling, I'm just giving my hands like this. Okay, at least one drop I want. So like that, okay, like that this advertisement was going on. Okay, super advertisement it was a super hit advertisement. Next day when it was aired, okay, when it was aired, the advertisement, like me, lot of people also become paithyam. I mean, for that advertisement, seeing that advertisement, pa, super advertisement, pa, inna Katrina Kaif, pa, super advertisement, mango juice everywhere, mango juice, slice advertisement became very hit, and people were purchasing slice, okay, like anything. And okay, and as expected, what has happened? Alga Gavani, okay, now what has happened? Your sales is increased, okay, your sales is increased. Now Katrina Kaif is also sitting here, okay, Katrina Kaif is also sitting here. 1 year gone, okay, 1 year gone. Now the sales number is coming. The salesperson is telling, okay, what is the new sales? Okay, what is the new sales? Then the person is telling that, sir, our new sales is 200 crores. Our new sale is 200 crores. Entire room was jumping with joy. Correct? Entire room was jumping with joy because their sales got doubled. That is what our objective is. Our sales konja increase pannu. Our objective was to increase the sales, and our sales itself got doubled. Correct? And the reason was Miss Katrina Kaif. Okay, now it is Mrs., but I don't agree. Okay, Miss Katrina Kaif. Now Katrina Kaif is also sitting out there. She is also smiling happily. Yes, the sales is increased by 200 crore rupees. Everyone is very happy, pa. Okay, wow. Now Katrina Kaif is saying, okay. So the sales is doubled, right? 100 crore rupees became 200 crore rupees. So, okay, what was your profit? 5 crore rupees was your profit, right? What was your profit? 5 crore rupees was your profit, right? So which means 10 crore rupees is your profit. So 5 crore rupees are earning because of me. Give me 2.5 crore rupees. Now everyone became sad. We have to give 2.5 crore rupees to Katrina Kaif. Okay, what I am telling is that give 2.5 crore rupees to Katrina Kaif. She is telling, hey, give me fast. I have another shoot. I have to go. Correct? So what I am telling is that, okay, give her 2.5 crore rupees. Okay, she wants to go. The CEO is very angry. Pa, no, pa, 2.5 crore rupees. 50%, not 50%, okay. My hands are shaking. I'm telling that, okay, don't worry, pay. So 2.5 crore rupees check signed, given to Katrina Kaif. Katrina Kaif gone. Okay, Katrina Kaif gone. Till now. Okay, till now. Are you all following the story? In the story, you follow Pandriya? Students?
Yes, sir.
Okay. Now. Okay. Now, Katrina Kaif gone. all the people are sitting pa, all the people are sitting like anything pa. What pa, 50% you gave pa, okay, 50% you gave. What I am telling is that, okay, don't worry, sabar karo, okay ba, you please, okay, just be patient and try whatever I'm trying to, okay, whatever I'm trying to tell, just try to understand pa. Now what is happening, if the sales is 200 crore rupees, how much will be my variable cost? If my sales is 200 crore rupees, how much will be my variable cost? My variable cost is 40%, correct? So how much will be my variable cost? 40% of 200? 80 rupees is my variable cost. Okay, sir. Now 80 rupees is my variable cost. My contribution is 120. How much is my fixed cost? 30.
30.
Correct? 30 is my fixed cost. Now 30 rupees is my fixed cost. What is my operating profit? 120 minus 30? 90. Correct? 90 rupees is my operating profit. How much is my interest? So how much is my interest? 20 rupees. Correct? I am having no change because interest is a fixed cost. Hello, sales increase aganale interest increase aguma? No. Because of sales, will the interest increase? No. So 20 rupees is my interest. How much is my profit? Adaga, how much is my profit? 70 rupees is my profit. Now from that I have to pay some 50% taxes also, right? So 70 rupees is my profit na. 35 rupees gone as taxes. Okay, 35 rupees gone as taxes. What is my profit? 35 rupees is my profit. Yo, understanding what is happening. Sir, 10 dana sir aayirukunu. 35 rupees is my profit. Are you understanding? Yes or no? So Katrina Kaif got fooled pa. But Katrina Kaif got only 2.5 crore rupees, thinking that because of her we earned only 5 crore rupees. Okay, because of her she earned only 5 crore rupees, but because of Katrina Kaif we earned 30 crore rupees. Okay, our 30 crore rupees le 50% na 15 crore rupees she should have received. Adu kudu vidupa, that was her amount. We were ready to pay 30% also. So 30 into 30%, 9 crores we were ready to pay. But how much she got? 2.5 crore rupees. Correct? She got only 2.5 crore rupees, thinking that sales 100% increase na, profit is also 100% increase. 2.5 crore rupees she gone and went. Correct? She is happily going home with 2.5 crore rupees. Now here we are becoming very much happy pa. Correct? Yeah, na, we were ready to pay 30%, which means 9 crore we were ready to pay, but only 2.5 crore rupees we paid. Correct? So the balance amount is the amount that we actually saved. Yes, everyone is becoming happy. Everyone is clapping. Pa, Tofik, what a deal, pa. What a deal you did, pa. Super deal you did, pa. Super negotiation it was between you and Katrina Kaif. Yes. So now, what is happening here? Okay, what has happened? The reason is that Katrina Kaif didn't know financial management, okay, ba? Or Katrina Kaif didn't study financial management with Tofik Tufail pa. Okay, had Katrina Kaif studied financial management with me, she should not have done this mistake. Correct? She should have got this idea that sales increase is not always increase in profit. She should have got that idea had she attended my class. Correct? No, you guys are lucky. Okay, you guys are lucky. You guys are attending my class. Okay, so tomorrow you will not become like Katrina Kaif and do this mistake. Will you do this mistake tomorrow? Will you do this mistake tomorrow? Online students? No, correct. No, you guys are becoming smart now. You guys are becoming smart because you guys are understanding something. So what is happening here? Ipa alaga gavani, what is happening here? Now we are just going into the depth, okay, depth of the concept. What is happening here? How much percentage increase in sales is there? 100% increase in sales is there. Correct? Sir, how 100%? 200 minus 100 is 100 rupees. So 100 rupees increase is there. 100 rupee divided by 100 rupees. So which is 1 into 100%. Okay. So that is a 100% increase in sales. If you are not understanding, you can take your calculator, put 100 plus 100%. You are going to get 200. Okay. You are going to get 200. Now, how much percentage increase is there in profit? Calculate and tell me how much percentage increase in profit is there. Profit is increased by how much percentage? Calculate and tell me. Is profit is increasing by 100%? Appadina 10 rupees irukunuba profit. 5 plus 100% should be 10 rupees. How much percentage increase? 5 is becoming 35. Now what is the percentage? 600 percentage. Sir, how to calculate? 50 is becoming 35. So what is the increase? 30 is the increase. 30 is increased from where? 30 is increased from 5. So 30 divided by 5 is equal to 6. So 600 percentage increase is there. Okay, 600 percentage increase is there. Are you all understanding? See, this is the point. Okay, this is the point of understanding. Sir, which means if I am increasing my sales by 100 percentage, my profit is increasing by 600 percentage. Again, if my sales is increasing by 100 percentage, my profit is increasing by 600 percentage, which means 6 times. Correcta? 6 times increase is there. Clarity irka? Appadina, if 1% increase in sales is there, that is a 6% increase in profit. If 2% increase in sales is there, that is a 12% increase in profit. If 5% increase in sales is there, that is a 30% increase in profit. So 5 into 6, okay, va? So 30%. If 50% increase in sales is there, 50 into 6 is equal to 300%. Okay, va? If 100% increase in sales is there, there is a 600% increase in profit. I'm proving it by numbers also, right? So now, 100% increase in sales. What is the percentage increase in profit? What is the percentage increase in profit? Repeat again. What is the percentage increase in profit? 600% increase in profit. Now the question is, why, sir? How this is happening and why this is happening is the next question. Correct? நான் சேல்ஸ் கொஞ்சம் புஷ் பண்ணிருக்கேன்னா ப்ராஃபிட் கூட அவ்வளவுதானே புஷ்ஷா இருக்கணும். If I'm pushing my sales little, now profit should also be pushed a little. Why the profit increase is more than the increase in sales is the question. Correct. Now let us understand. Okay, let us understand what is happening. This 6 times, right? This 6 times that I'm calculating, because there is a 6 times increase, right? This 6 times is called as leverage. This 6 times is called as leverage. Repeat, this 6 times is called as leverage. Correct? This 6 times is leverage. Sir, what are you trying to tell, sir? Okay, what are you trying to tell? Which means I am having a leverage. Leverage na, my jump in profit is more than the jump in sales. My jump in profit is more than the jump in sales. I'm having a 6 times leverage. So 1% jump in sales, my profit is jumping by 6%. 2% jump in sales, my profit is jumping by 2 into 6, 12%. 10% jump in sales, my profit is jumping by 10 into 6, 60%. 100% jump in sales, my profit is jumping by 600%. So which means I am trying to tell that there is a 6 times leverage that I'm getting. There is a 6 times leverage that I'm getting. Okay, sir. Clarity. Yes or no? Answer me. Yes or no? Super. Okay. Super. Others just ஒரு thumbs up கொடுக்கலாம்ப்பா, respond பண்ணலாம். ஓகேவா? You can give a thumbs up, you can respond, you can give a clap. If you want, you can give a heart. Okay, everything you can do. Okay, so I'm just giving you just introduction to leverage. Okay, till now we have not entered, just ஒரு concept clarity. இந்த concept clarity மட்டும் உனக்கு கிடைச்சதுன்னா you will be able to move ahead. Okay, you will be able to move ahead. Okay. Okay, now sir, okay sir, understanding. There is a 6 times leverage, sir. Okay, there is a 6 times leverage. Now the question is, why there is a leverage is the next question, sir. Why there is a leverage? Let us understand what is happening. Okay, let us understand. If there is a 100% increase in sales, you see that there is also 100% increase in variable. What is the percentage increase in variable cost? 100%. 60 is becoming 120. What is the percentage increase in contribution? Again 100%. What is the percentage increase in fixed cost? fixed cost is not increasing. Okay, fixed cost is not increasing. Okay, sir. What is the percentage increase in profit? Calculate and tell me what is the percentage increase in operating profit. Calculate fast. Tell me what is the percentage increase in operating profit. 30 is becoming 90. Appadina, how much percentage the profit has increased? Chelakutis. I want an answer. Okay, I don't need silent class. If that, hey, first of all, do you all know how to calculate percentage increase? Change divided by original amount into 100 is percentage increase. The change is 60 rupees. 30 becoming 19, it is increased by 60 rupees.
200.
Yes, so 60 divided by 30 into 100. So that is a 200 percentage increase in profit. How you can prove, sir? 30 calculator, if you put 30 plus 200 percentage, 30 plus 200 percentage, you're going to get 90 rupees. So which means there is a 200 percentage increase in profit. Understanding? Hello. So,
Yes, sir.
okay, so 200 percentage increase in profit. What is the percentage increase in interest? There is no increase in interest. Sir, now what is the percentage increase in profit before taxes? 10 rupee is becoming 70 rupee. What is the percentage increase?
600.
600 percentage increase in profit. What is the increase in tax? 5 rupee becoming 35 rupee. 600 percentage increase in tax is there, and my PAT is increasing by 600 percentage. How much percentage my EPS is increasing? Okay, but because this is 5, so this is becoming 7. Okay, so that number of equity shares will not change, so this is becoming 7. So what percentage increase is EPS? 600, because 1 is becoming 7, so 600 percentage increase is there, sir. Sir, which means, okay, which means ideally 100 percentage increase should be 100 percentage increase in profit, sir, but it is not increasing like that, sir. Something is happening, sir. Okay, something is happening, sir. What is that? Okay, what is happening? 100 percentage sales, variable cost is also increased by 100 percentage. Okay, sir, no issues. Contribution also is increasing by 100 percentage, normal only, sir. Afterwards, after contribution, directly 100 percentage is becoming 200 percentage, sir, which means something is happening here. Correct? Which means something is happening here. Okay, sir. Now 200 percentage is directly becoming 600 percentage, sir. Because of something, it is becoming 600 percentage. What is that something? That something is this, sir. You know, because of this only, it is something is happening here. Because of this, 200 is again becoming 600. Now 600, 600 and 600 is there. Okay, nothing is happening, sir, which means whatever is happening, it is only happening because of these two things. One is fixed cost and one is interest. Okay, one is fixed cost and one is interest. Now this is a fixed cost. If you see very clearly, interest is also a fixed cost because interest is not moving by sales, right? So then you know the leverage. Okay, then you know the leverage. The leverage is happening because of fixed cost. Okay, so you're finding the reason part. So fixed cost is the hero of this chapter. So leverage is happening because of fixed cost. No fixed cost, no leverage. Less fixed cost, less leverage. More fixed cost, more leverage. Leverage is happening because of fixed cost. Okay, this is one thing that I have established from here. Yeah, this is also a fixed cost, and interest, this is also a fixed cost. So because of these two things, I'm getting some leverage, and both are fixed cost. So leverage is happening because of fixed cost. Now this is the fixed cost. It is happening because of the operations of the company. So this I call it as operating fixed cost. And this is interest, that is again a fixed cost, that is happening because of the financing decision of the company. So this I call it as financial fixed cost. Okay, so we are having two types of fixed cost. Again, fixed cost I am bifurcating into two. One is called as operating fixed cost and another one is called as financial fixed cost. So operating fixed cost is also called as fixed cost. Financial fixed cost, there is a name which is called as interest. So because of fixed cost, leverage is happening. If there is no fixed cost, no leverage will be there. Suppose if you prepare an income statement removing this fixed cost and removing this interest, okay, removing this fixed cost and removing this interest, if you prepare an income statement and then if you do 100% increase in sales, you are going to see that 100% increase in sales and 100% increase in profit will be same. There will be no, okay, jump or there will be no leverages. Either you can check it on your own, okay, you can check it on your own. You can prepare an income statement without an income statement, without a fixed cost, and then if you just drag it, which means if you increase it, you will find that the increase in sales will be equal to the increase in profit. There will be no jump, which means there will be no there will be no leverage. Okay, sir. So leverage is happening because of fixed cost, and fixed cost again bifurcated into two: operating fixed cost and financial fixed cost. See, I'm telling you now, okay, I'm telling you now, we are having three types of leverages, okay, we are having three types of leverages. Sir, what are those three types of leverages? First one is operating leverage, okay, first one is operating leverage. Second one is financial leverage, and the third one is combined leverage, okay, and the third one is combined leverage. So operating leverage, financial leverage and combined leverage, we are having three types of leverage. Sir, what do you mean? Now, okay, now see, if there is a 100% increase in sales, variable cost is also increased by 100%, no issues. Contribution is also increased by 100%, no issues. 200% profit is increasing, operating profit, correct? And now if I'm comparing sales and operating profit, 100% increase in sales is having 200% increase in operating profit. 100% increase in sales is having 200% increase in operating profit. So which means there is a 2 times leverage, correct? At 200% divided by 100%, so there is a 2 times leverage. Okay, so this is one leverage. Okay, so 2 times one leverage. Now 200, now sales, now forget sales, 200% increase in profit, okay, operating profit, 200% increase in profit is increasing my EPS or increasing my total profit by 600%. So 200% increase in profit is having an increase in EPS of 600%. So 600 divided by 200 panna, there is a 3 times leverage. So which means 1 time change in profit is having a 3 times change in EPS. So 2 times change in profit is having a 6 times change in EPS. So there is some 3 times leverage here. Clarity irka? Yes. Okay, sir. So which means you found out 3 leverages, sir. One is 2 times, one is 3 times, and one is 6 times. Now, this leverage, okay, now this leverage 2 times, this leverage is happening because of the operating fixed cost. So because of operating fixed cost, the leverage I am getting is called as operating leverage. Because of financial fixed cost, the leverage that I am getting this 3 times, so this leverage is called as financial leverage. And because of a combination of operating fixed cost and financial fixed cost, the leverage that I am getting is called as combined leverage. Sir, understanding? Are you all with me? Yes, understanding. Clarity. Okay, sir. So 3 types of leverage you found out, sir. One is operating leverage, one is financial leverage, and the one is combined leverage, sir. So which means I am having an operating leverage. I am having an operating leverage of 2 times, sir. I am having a financial leverage of 3 times, sir. And then I'm having a combined leverage of 6 times, sir. Okay, was 6 times. Now I'm just going to give you the formula. Okay, from here. Okay, the formula is starting, sir. Operating leverage, financial leverage, and combined leverage. Okay, first one is a general formula. Okay, first one is a general formula. And next one is a percentage change formula. Okay, next one is a percentage change formula. Now I will be writing 6 formulas. Okay, I'll be writing 6 formulas. First one, contribution divided by EBIT. So operating leverage is equal to contribution divided by EBIT. Financial leverage is equal to EBIT divided by EBT. And combined leverage is equal to contribution divided by EBT. It's a percentage change formula. Percentage change in EBIT divided by percentage change in sales. Percentage change in EPS divided by percentage change in EBIT. Then percentage change in EPS divided by percentage change in sales. And combined leverage can also be written as operating leverage into financial leverage. Okay, so these are the 6 formulas. Okay, these are the 6 formulas that I've written. Okay, but these are the 6 formulas. Now, are you all with me? Are you all with me? Till now, are you all with me? See, first we have introduced operating leverage, financial leverage, and combined leverage. Then I have written the formula. Don't worry, okay? You don't need to mug up formula. No, I'm going to explain, okay? But are you all with me till now? Till now,
Sir.
super. Okay, super. I'm getting responses. Very good. Okay. Okay. Now. Okay. Sir, how this formula is coming, sir? The next question, how this formula is coming, sir? Chellakutti, inge paru. How I calculated my operating leverage? This 200 percentage, right? So this 200 percentage is nothing but percentage change in operating profit divided by 100 percentage is nothing but percentage change in sales. So percentage change in operating profit divided by percentage change in sales is equal to operating leverage. So percentage change in EBIT divided by percentage change in sales is equal to operating leverage. Sir, how I calculated financial leverage? Sir, percentage change in EPS, you divided it by percentage change in operating profit. That is what 600 divided by 203 times. So percentage change in EPS divided by percentage change in EBIT is equal to financial leverage. Sir, how you calculated combined leverage? Hey, 6 times. So 600 percentage divided by this 100 percentage, because 100 percentage increase is having 600 percentage increase, right? So 600 divided by 106 times. So percentage change in EPS divided by percentage change in sales is equal to combined leverage. Yes, sir. Yes, sir. Understanding. Are you all mugging up this formula or understanding the formula? Are you all mugging up or understanding? You all are understanding the formula. Correct? You all are understanding the formula. There is no magic. It is all logic. Okay, but every formula is logic. Okay, every formula is logic. Okay, in my regular class and all, if at all there are some 50-60 formulas in financial management, now not even a single formula we mug up. Okay, not even a single formula we mug up. Each and every formula, clear cut logic we discuss. Okay, now, sir, general formula how it is arrived, sir. Okay, general formula how it is arrived. Now, operating leverage is happening because of the fixed cost, correct? Operating leverage is happening because of the fixed cost. So because of fixed cost this is happening, so contribution divided by EBIT. Okay, for now you understand like this. Actually there is a logic. Okay, there is a logic through which we derive the formula. Okay, but that is little bit, okay, that is a little bit more towards the regular class. I'm not going that, but now, yeah, I want to give clarity also. So contribution divided by EBIT is equal to operating leverage because it is happening because of fixed cost, right? So contribution divided by EBIT. Now because of interest my financial leverage is happening, so EBIT divided by profit before tax, EBIT divided by profit before tax, that is what is financial leverage. Because of these both combined leverage is happening, so contribution divided by PBT, this is what is your combined leverage. So appadina contribution divided by EBIT is operating leverage, EBIT divided by EBT is financial leverage. Contribution divided by EBT is equal to combined leverage. So these are the 6 formulas, and operating leverage into financial leverage is equal to combined leverage. And 2 into 3 is equal to 6. Okay, 2 into 3 is equal to 6. So operating leverage into financial leverage is equal to combined leverage. Okay, is equal to combined leverage. What is happening? Okay, sir. Sir, now I am remembering the formula, sir. In the exam, I will not remember the formula, sir. What if I am writing EBT divided by EBIT? What if I am writing percentage change in EBIT divided by percentage change in EPS? Or what if in the exam I became blank, sir? There is a possibility, right? So, on the edathila, I am just giving you a way how to remember the formula. Okay, ba? You just have to remember one number that is called as 3. Namam. Okay, ba? If you remember this number 3, okay, moon. Okay, moon. If you remember this, okay, you will be easily, okay, you will be easily able to remember the formula. What, sir? First, income statement, you all know, correct? It is stamped in your brain. Income statement. So, sales minus sales minus variable cost is equal to contribution minus fixed cost is equal to EBIT minus interest is equal to EBT minus taxes is equal to profit after taxes. Okay, profit after taxes divided by number of equity shares is equal to EPS. Okay, this is what is the income statement that is actually already stamped in your brain. Correct? Already stamped in your brain. Now you just have to draw a namam. Sir, என்ன சார் சொல்றீங்க? ஒரு 3 எப்படி சார்? Sales is connected with EBIT. EBIT is connected with EPS. From bottom to top you have to go. Okay, va? Percentage change in EBIT divided by percentage change in sales is equal to operating leverage. Percentage change in EPS divided by percentage change in EBIT is equal to financial leverage. Percentage change in EPS divided by percentage change in sales is equal to combined leverage. From bottom to top you have to go. Sir, left side from top to bottom you have to come again or a namam. Okay, va? So contribution is connected with EBIT, EBIT is connected with EBT. Okay, sir. So contribution divided by EBIT from top to bottom, it is operating leverage. EBIT divided by EBT, it is financial leverage. Contribution divided by EBT is equal to combined leverage. இன்னொரு நாமம். Okay, va? So you just have to remember. இது பார்த்த உடனே 3 மாதிரி தெரியுதா? Okay, va? See, if you can look, if it's looking like a 3, right? So this is how a visualization. Okay, this is the visualization how to remember the formula. Okay, this is the formula that I used to remember when I was a CA inter student, because formula is easy, pa. Okay, it is very easy formula. But in the examination, what if we become blank? What if we are not able to remember the formula? But if you remember the visualization, okay, visualization is very easy to remember. Okay, va? So you just have to draw a namam. So adhe edutha income statement prepare the namatha prepare pannale you will be able to get these 6 formulas. So these 6 formulas I have established: operating leverage, financial leverage, and combined leverage. Okay, so contribution divided by EBIT, EBIT divided by EBT, contribution divided by EBT. Sir, this you did, sir, but this 2 times 3 times 3 times we calculated using percentage change, sir. You establish and show me general formula is also working, sir. Okay, what is your contribution? 60. What is your operating profit? 30. Okay, what is your contribution? 60. What is your operating profit? 30. What is 60 divided by 30? 2. Correct? Okay, financial leverage. What is your EBIT? 30. What is your EBT? 10. Correct? So 30 divided by 10. So 30 divided by 10. What is 30 divided by 10? 3. Sir, contribution divided by EBT. What is contribution? 60. What is EBT? 10. So 60 divided by 10 is equal to 6. Sir, here also 2, 3 and 6. Here also 2 times, 3 times and 3, 6 times. Sir, which means all the formulas are working fine. So these are the 6 formulas for leverages. With this, the introduction or the conceptual part of leverages is completed. Now everyone just clap your hand, celebrate this moment that yes, super sir, we have completed the conceptual part of leverages. Celebrate it, pa. Okay, I want some claps, I want some heart, I want that yes sir, we are happy sir, super sir, and the mari excitement I want you all, I want you from you all. Super. Very good. Okay. Super. Okay, pa. So now in the six formulas, now in the leverages சில special points இருக்கும்பா, ஓகேவா? இந்த leveragesல சில special pointsல இருக்கும். Those special points we are going to cover with, okay, while we solve the problems, those special points and all we are going to cover, okay, which means that will help us to solve problems also. We are having some special points. Those special points we are going to cover from the problems, okay, from the problems. So now let us take the problem first, okay, let us take the first problem. A few problems பண்ணிட்டு I'm going to end this class. I don't want to end this class. Some problems பண்ணிட்டு I want you all to gain some clarity. After gaining some clarity, I want to leave you. Okay, after gaining some clarity, I want to leave you. So now, this is the book. Okay, this is the book that you're going to get. Okay, the printout that you're going to get. In this book, okay, in this book, you are having, okay, in this book, you are having all the past attempts. Okay, from 2018 till November 2023, okay, till November 2023, which means 208 pages are RTP, complete financial management RTP are there chapter wise. Then from 225 to 371 previous year question papers are there, and these previous year question papers are mixed questions. That is for your practice, okay, that is for your practice that we are going to solve. Okay, we are going to solve lot of questions in the classroom, okay, but you have to be with me. Okay, now without wasting any time, okay, without wasting any time, let us go into leverage. Okay, let us go into leverage. Okay, let us see this problem. Okay, let's see this problem. See this problem. Calculate, okay, calculate operating leverage, financial leverage and combined leverage from the data under situation 1 and 2 and financial plan A and B. Okay, under situation 1 and 2 and financial plan A and B, you want to calculate operating leverage, financial leverage and combined leverage. Okay, see what the data is given. Installed capacity is 4,000 units. So I have the capacity 4,000 units. Actual production is 75% of the capacity and sales. So how much I'm selling? Even though I'm having a capacity of 4,000 units, how much I'm selling? 4,000 into 75%. What is 4,000 into 75%? 3,000 units I'm selling. Understanding? Hello, Chellakutis. So from 4,000 units, 75% is my sales. So 3,000 units is my sales. 30 rupees is my selling price. So 3,000 into 30. Okay, 3,000 into 30. Okay, 90,000 rupees is my selling price. Adala 15 rupees is my variable cost. Now fixed cost, I'm having two situations. Okay, I'm having two situations, situation 1 and situation 2. So which means two fixed cost is there. So two operating leverage will be there. Correct? Two operating leverage will be there. 15,000 and 20,000 rupees. So this is called as the cost structure of the company. Next, capital structure is given. They need a 20,000 rupees. In the first case, 10,000 is equity and 10,000 is debt. Okay, now this is financial plan A. See, that was situation A. This was about the fixed cost. Now they're having two financial plan. In the first case, they can have a debt of 10,000 rupees and an equity of 10,000 rupees. In the second case, they're having equity of 5,000 rupees and debt of 5,000 rupees. Sorry, equity of 15,000 rupees and debt of 5,000 rupees. So this is what. So why they're giving like that? Yeah, interest rate is 20%, right? So from this you can calculate interest. Here 10,000 into 20%, 2,000 rupees is the interest, and here 5,000 into 20%, 1,000 is your interest. Okay, so both the financial plans, the interest is differing, and both the situations, the fixed cost is differing. Are you all understood this question? The first case is that you have to understand the question, because reading the question is more important than solving the question. Okay, I always tell that reading the question is more important than solving the question, because once you read this question, you solve the problem in mind itself. At least the approach will be solved in the mind. Then you are just going to replicate in paper. Okay, understood the question till now? I just need some clarity. Have you all understood this question?
Yes, sir.
Or a thumbs up code. Very good, very good. Okay, fine. Okay, sir. Now let us go ahead. Pa. Okay, any problem, I'm just giving you now for the leverage. Okay, for leverage, make a note of it. Pa. For a leverage, anything comes, first prepare an income statement. Pa. Okay, any question for leverages, first prepare an income statement. Okay, incomplete income statement irundalum, you prepare income statement. So first step is to prepare the income statement. Just a moment. Okay, super. Now, first we are going to prepare an income statement. First for two situations, okay, because first we are preparing for operating leverage. So for two situations. So first for situation one, okay, first situation one, and then situation two, okay, and then situation two. Hmm. Okay, so situation one and situation two. Okay, so first we will draw the income statement. Sales minus variable cost is equal to contribution minus fixed cost is equal to EBIT. Okay, wow. First formula for operating leverage. Okay, general formula alone you have to use first. Okay, wow. Or this percentage change formula you have to use only if asked. Usually general formula only we will use. So what is the formula for operating leverage? Contribution divided by EBIT. So you just have to put contribution divided by EBIT. Now, if we read the question, what is my sales? 3,000 units into 30 rupees is my sales. So 90,000 rupees is my sales. And what is my variable cost? 15 rupees. So 3,000 into 15 rupees, 45,000 rupees is my variable cost. Okay. So in both the cases, sales and variable cost will be same only. So 90,000 rupees is my sales and 45,000 rupees is my variable cost. Then what is my contribution? 45,000 rupees. Okay, wow. 45,000 rupees is my contribution. Now, under situation 1, I am having a fixed cost of 15,000. Under situation 2, I am having a fixed cost of 20,000. So here, 15,000 in situation 1 and 20,000 in situation 2. Okay, 15,000. Okay, you can write this. Okay, RTP May 2018. Just you have to give reference also. Question number 4. Okay, question number 4. Okay, RTP. So if you get the book, you can actually relate it. Okay, RTP May 2018. Question number 4. Usually we have to give references also. Okay, and this is nothing but page number also. Let me give. Page number is 2. Okay, page number 2. Check. Page number 2. Okay, so page number 2. So RTP May 2018. Question number 4. Page number 2. Okay, sir. Now, what is 45 minus 15? 30,000. So, 30,000 rupees is my EBIT. What is 45 minus 20? 25,000. So, 25,000 is my EBIT. Okay, sir. Now, let me calculate operating leverage. Operating leverage is equal to contribution divided by EBIT. So, which means 45,000 divided by 30,000 here and 45,000 divided by 25,000 here. Now everyone calculate and tell me what is the operating leverage for situation 1. 45,000 divided by 30,000. What is the number?
1.5.
1. Is it 1.5? Yeah, 1.5. Okay, so 1.5. And what is 45,000 divided by 25,000? 1.8. Yes, 1.8. So see, from here we are getting that if fixed cost is more, because there it is 20, 15, here it is 20, right? If fixed cost is more, leverage will also be more. Understanding? Okay, sir. So here, okay, sir, till here it is over, sir. Next one, For both this situation, I am having two financial plans for. In the first plan, I'm having an interest of 2000. In the second plan, I'm having the interest of 1000. Okay, tax details is not given, so no taxes are there. Otherwise, tax detail is given. You also have to put the tax and also have to put the PAT and also have to put number of equity shares until EPS you have to put. If tax and number of shares detail is given, you have to prepare income statement till EPS. Here, no tax and no income statement is given, so you are preparing income statement till EBT, which means till PAT only you are going to prepare, assuming taxes are 0. Okay. Now 1.5 and 1.8. Sir, now I have to prepare for plan A, plan B, sir. Okay, plan A, plan B I have to prepare, sir. Sir, which means for this EBIT, which means for this situation 1, 2 plans. And for this situation 2, 2 plans I will be having, sir. Okay. So which means it will be continuing from EBIT. So which means plan A and plan B for both the situations. Okay, for both the situations. EBIT. What is no, let me go situation wise. Situation 1, situation 2, right? Let me go situation wise. Why I'm confusing? Format கொஞ்சம் ஈஸியா பண்ணிடலாம். So let me go situation 1, situation 1, situation 2, plan A, plan B, plan A, plan B. What is the EBIT in situation 1? 30,000. Okay va? So 30,000 and 30,000. EBIT is not changing. What is the EBIT in situation 2? 25,000. So 25,000 and 25,000. Okay, sir. Now EBIT minus interest. What is the interest in plan A? You see 2,000 is the interest in plan A. 1,000 is the interest in plan B. So 2,000 plan A, 1,000 plan B. 2,000 plan A, 1,000 plan B. So if I do this, I will get earnings before taxes. No taxes are there. So directly I can write this as PAT. Okay, directly I can write this as EBT also I can write, PAT also I can write. It doesn't matter. Okay, sir. What is 3,000, 30,000 minus 2,000? 28,000. And what is 30,000 divided by 1,000? 29,000. What is 25,000 divided by 2,000? 23,000. What is 25,000 divided by 1,000? 24,000. Sir, how to calculate financial leverage? Financial leverage is equal to EBIT divided by EBT. What is the EBIT? 30,000 divided by 28,000. 30,000 divided by 29,000. 25,000 divided by 23,000. 25,000 divided by 24,000. Now tell me, what is the EBIT for situation 1 plan A? 30,000 divided by 28,000.
1.07.
1.07. What is 30,000 divided by 29,000? 1.03. What is 25,000 divided by 23,000? One point zero eight. What is 25,000 divided by 24,000? Quick. 1.04. So these are all the financial leverages. Okay, these are all the financial leverages. So அவங்க என்ன கேட்டிருக்காங்க? Find out operating leverage, find out financial leverage and find out combined leverage also. So இப்போ நம்ம என்ன பண்ணலாம்? ஓகே, ஒரு எக்ஸாமினருக்காக ஒரு சம்மரி மட்டும் கிரியேட் பண்ணிடலாம். ஓகேவா? So situation 1, situation 2, plan A, plan B, plan A, plan B. First, operating leverage. What is operating leverage for situation 1? 1.5, 1.5, 1.8, 1.8. Okay, so 1.5, 1.5, 1.8, 1.8. What is the financial leverage? 1.07, 1.03, 1.08, 1.04. Now combined leverage also we can calculate. Actually we can calculate this into this. And rounding off like problem வரதுக்கு chances இருக்குது. So அதனால we will calculate contribution divided by EBT. So do சீக்கிரமா do 45,000 divided by 28,000. 45,000 divided by 28,000. 1.60. So 1.60.
Yes, sir.
What is again situation 1? So what is 45,000 divided by 29,000? 45,000 divided by 29,000. 45,000 divided by 29,000.
1.55.
1.55. Okay, 1.55. I want others also to answer. Okay, so again contribution 45,000. So contribution is same. 45,000 divided by 25,000. Sorry 23,000. 45 divided by 23. 1.95. And again 45 divided by 24. 1.875. Okay, 1.875. So this is what is the answer. Okay, this is what is the answer that the examiner is expecting. Okay, now keep your fingers crossed. We will just check the answer. Okay, question number 4. Let us check the answer and let us compare. So if you see question number 4, first one, 1.5, 1.8. Okay, 1.5, 1.8. So which means 1.5 operating leverage. Check. 1.8 operating leverage. Correct answer. Okay, now financial leverage for both the cases. Financial leverage for both the cases. Okay, for plan A, 1.07 plan. So situation 1, 1.07, 1.03. 1.07, 1.03. Super. 1.09, 1.04. 1.09, 1.04. இது round off பண்ணிட்டு 1.09 வரணும். ஓகேவா? So 1.08 something, அதுக்கப்புறம் something வந்திருக்கும். You have not done the rounding off. Okay, so 25 divided by 23 என்னது? What is 25 divided by 23?
1086.
So 86 na it is rounding off to 9. Okay va? So these and all mistake you don't do pa. Cheriya. So rounding off and all you don't do. One digit you are showing na, at least and the one digit proper. Always the last digit should be rounding off, or you put 2 digits. Okay, but the last digit should be rounded off. Okay, see, because we solved the problem, we identified a mistake. Now because we identified a mistake, you all learnt. Correct? Are you all with me? So now you all understood that ama sir, always last digit should be rounded off. Okay va? So now 1.09 is the answer. Okay, 1.09 is the answer. See, this is correct only answer. Okay va? But who knows, okay, in what mood the examiner is. Summa half mark எடுத்துட்டானா நீ என்ன பண்ணிர போற? Just because of this trick half mark losing na எவ்வளவு அசிங்கம். Yes, so okay, you should not do this. Now 1.04, 1.04. Super. Now combined leverage. Adhe mari they are calculating combined leverage. 1.61 and situation 1, 1.61, 1.96. 1.61, 1.96. Actually it is 61 and it is 96. Again rounding off. Okay, 61 and 96. You are not putting properly. Either it should be 61 and it should be 96. Maybe you are not, 60, 6 ka apro it should have been something. 0 ka apro 6 7 vandiruko. Okay, so rounding off mattum alaga parupa. Okay va? You should not do this mistake. 1.61, 1.96. Okay, next 1.55, 1. So 607 na evlo varnu? 61 varnu. Correct? It is not 1.60. So you have to make note of that. Okay, rounding off is a very big. See, now because you attended this class, because we solved the problem together, because we are checking the answer, you will most probably save half mark or 1 mark because of this. So whenever you are writing any number, After the digits, you always have to check whether you want to round off or not. If you're putting one digit, that has to be round off. If you're putting two digits, that have to be rounded off. Okay, wow. Without rounding off, don't try. Digit na round off. 5 plus any number, rounding off the previous digit. One digit na one digit also round off, two digit and two digit also round off. Okay, wow. So this is something. All these are very silly points. Now 1.55, 1.875. So 1.55, 1.875. This is what is the answer. Okay, so with this, we completed question number 1 for leverages, and we also learned a lot of points out of it and practically solved it, how a general or a typical problem will look like. So this is a typical 4-mark problem or a 5-mark problem. Okay, typical 4 or a 5-mark problem, leverages. Are you all with me till now? My dear Chellakutis, are you all with me? Okay. Okay. Super. Okay, super. Now, okay, now, because the time, because the time is up. So what, and it is also night time. Sometimes I'm going to extend also, okay, or sometimes I'm going to extend also. So you have to be ready for that. Are you all ready? Hello. Sometimes I will extend. First day I don't want to give you the dosage and all, okay, but sometimes I will extend. You will all will be ready, right? Sir, sometimes 9 o'clock night, sometimes 9:30 night, sometimes 10. Okay, don't worry. Okay, sometimes Sunday, Saturday na konja seekrama aarambichilla. Like instead of 6, see, we can start at 5, we can start at 4, okay, or we can start at sometimes 3 also. Hey, you all are ready, right? Hello.
Yeah, yes, sir.
Super. Okay, super. This is what I want from you all. Okay, so because this is the evening time and weekends mostly will be free, I assume. So that is the reason we will be extending some classes also. Okay, so for now, if at all I want to make a small consolidation of today's class. We started with foundation of financial management. What is financial management? It is meaning taking decisions, how many types of decisions, what is the objectives of financial management, all this we discussed. Then we went on to understand how an income statement will look like, how an income statement is made. Then we understood the real concept of leverages, what is happening in leverages. Then we understood the formula for leverages, and then we solved a problem. In that problem also we learned. I will tell you one small suggestion and one feedback I want to give you. Everyone, have a notebook, okay, in which you're solving the problem. In the last page of the notebook, okay, trust me, this will be very much helpful. In the last page of the notebook, they make note whatever mistakes you're doing. But mistakes is the biggest source of learning. If you're making mistakes, you will learn. If you're not making mistakes, you will not learn. Okay, so that is the biggest source of learning. Take your notebook, last page. First point, the mistake that you did was rounding off mistake, right? So write down every time last digit should be rounded off, especially in chapter leverages. So once you make note of the mistake, now at the end of the class, you would have made a lot of mistakes, or I would have made a lot of mistakes. You all can make note of those mistakes. Before the examination, mistakes mattu paatha, automatically sum will be revised. Yes, this will be the sum. Okay, but mistake is the biggest source of learning. You have to learn from your mistake, and you have to learn from others' mistake also. If I am making some mistake, you learn. Correct? If one person is making a mistake, you learn from that mistake. Make a note of it. Yeah, I should not repeat that mistake. That is the biggest source of learning. Are you all with me? Yes, or thumbs up. Good. Yes, sir. Understood this point. Okay. Daily, I will going to give you the small points and all. And this you can do for all the subjects. I also used to do. As a student, I used to do. Whenever I'm solving some problem, right? What I'm going to do is that, and the problem tricky point alone, I will write it in the last page, or the mistakes alone, I will write it in the last page, or some important thing that I want to remember in that problem reference, I will write it down. So before the examination, if I just see those references, if I just see those mistakes, or if I just see those adjustment and tricky points, I will be able to remember everything. So that is the best part. Okay, that is the best part. Just studying is not enough. These kind of tactics and all you have to use before the examination, because you have to concise your discussion and then you have to study. Okay, so with this positive momentum, okay, we are ending today's class. Okay, we are ending today's class.